Hi, this is Clayton Ream with Van Ahn & Company with your afternoon grain and livestock marketing update for August 12th. Well, today was USDA supply and demand crop report today. We've traded a little bit of everything this week off of Monday's strong day off of weather. Yesterday's day, weak performance off of world macro markets, and then today's weak performance off a surprise USDA report where they really shocked us all. I think it's a safe statement that there wasn't really one in the marketplace that thought USDA was going to do what they did today by upticking yield in both corn and soybeans to a pretty large number. We're going to potentially have our second largest crop in U.S. history, but we still got a lot of time yet to finish out these crops and make sure we're able to reach these yields. So potentially looking for maybe in August, early September low, and still that kind of rally through harvest here as maybe these yields don't materialize quite what we're looking for. So on the day, the bean market actually traded limit down for the first time in quite some time, but bounced slightly off the low, still finishing down about 60 cents. Corn did not reach limit at all this today, but still finished down about 20-21 cents. And then over in the wheat market, just kind of tag along market down about anywhere from a nickel to 15 cents. Just not a lot of information for that wheat market to grab onto. World numbers, kind of a shocker there with the uptick in corn world numbers with an actual downtick in soybean numbers for the 15-16 marketing year. So again, still a lot of things to sort out here. Not necessarily a zone we feel that panic selling or chasing the market is going to be a wise decision, but you're going to have to watch the weekend weather over the next basically 7 to 14 days to see how this crop comes along. The soybean market's really the main market here. And then also we got to bring in the whole fund factor where they've basically got to pretty decent length other than in the wheat market. So we're going to see maybe some additional position squaring and see how well they're funded, able to withstand these market swings. And over in the livestock market, why we touch on the managed money is we actually saw the cattle market plunge $2 lower off of the news. The feeder cattle market held in there with the lower corn price, but maybe already seeing kind of the adjustment of the funds that have been recent buyers off of the lows off of cattle, bailing out of there to try to stick with their longs and their beliefs in the grain market. So only time will tell how they all sort this out, but we do have more reports, so only 45 days away. In the outside markets, the dollar actually did kind of tank down a little bit, down nearly $1.20 in general, despite the additional downgrade in the Chinese yuan. So that's also maybe a supportive factor. The market's going to pay attention, number one, to export sales in the morning to see if these lower prices spark a little bit of interest in buyer demand. And then also the weekend weather, which seems to be a little bit of hot and dry with a little bit of moisture for the North Dakota, Minnesota guy, but looks like the kind of the heart of the belt where a lot of these soybeans are produced. They're looking to potentially miss these rains, which could be maybe a detrimental fact with these higher temps that we haven't seen basically all year coming across. So in general, I guess that's what we got to pay attention to moving forward. As always, past performance is not indicative of future results, and trading in futures and options provides risk loss.